Hello guys, welcome to my YouTube channel. This is actually the first video on my YouTube channel, and this YouTube channel is solely meant for educational purposes, and it's solely meant for putting out what I do, and it's all about trading. And all I want to say is this: whatever you see here is not a financial advice. I'd always advise you to do your due diligence before you decide to invest in any sort of thing you see in the internet. So it's almost 2 years right now that I started my forex trading journey, and I've learned every strategy I've come across, just trying to filter out the noise and see what resonates with me. I found that simplicity is clarity. Keeping things simple quickly made me realize that price does only two things, which are filling internal range liquidity and taking external range liquidity. Filling internal range liquidity in the sense that price just fills imbalances and then moves back to take out the external range that brought it into that imbalance. So right now I just want to, this is not a tutorial video, I just want to do a breakdown on a trade I took on Thursday night, just trying to explain to you what I'm saying about what works and what doesn't work in the trading industry. Remember what I said, trading is about simplicity. Keeping it simple will save you a lot of stress and a lot of noise. Without wasting much of your time, let's just go straight to the breakdown. I told you I trade from fair value gaps, and this is a bullish market. This is a gold chart, and I'm about to break down to you the trade I took on Thursday Asian session, right? So this is a good chart, it's a bullish chart, as you can clearly see. It's a bullish market, pulling out bullish momentum and leaving fair value gaps to fill and then take out external range liquidity, just like I told you before. So going straight to my indicators, like I told you, it's not too much, it's just about fair value gap. I have to put on imbalance detector by onXAUUSD. It's on. That is how I identify fair value gaps. You see, it makes it easy for me to see fair value gaps clearly before I even mark them with my tools, right? So this is a bullish market, as you can clearly see, and these are fair value gaps, right? As you can see, from here we have this move, 1, 2, and 3. This third move here is an obvious break to the upside from this downside. This is the first break to the upside that identified that if we were in a bearish market before, we are now in a bullish market. This would also show you that we have a break of structure here. These ones are the extra things added, right? These are just the extra things added to what fair value gap does, just to make it make more sense, right? So as we've already identified this alone, this move to the upside, push to the downside, and then another impulsive move to the upside, breaking this last high and leaving a fair value gap. Fair value gap, that is the only thing I trade off of, fair value gap. So when it came into this fair value gap, this is a daily time frame. When it came into this fair value gap, all I have to do right here is moving down to a smaller time frame to figure out a price action that I would use to trade this trade to take this trade to the upside, right? So I would have to move to a smaller time frame now to figure out what is it called, a price action that would help me take this trade to the upside. First of all, I would want you to identify fair value, how many fair value gaps we have here, and then I would, from this fair value gap, show you every bit of example I'm talking about and how this market moved to the upside from here, taking these fair value gaps, taking fair value gap 1, taking fair value gap 2, taking fair value gap 3, and then taking fair value gap 4, doing the same thing from here to the upside, exactly the same thing. So let's now move down to a lower time frame to explain what I'm talking about. Before going down to the smaller time frame, I just identified the external range liquidity so that it's going to be easy for us when we get there. I just identified ERL, ERL, ERL. Then the internal range liquidity is, the short abbreviation is just IRL. The way we have ERL here, the short form is IRL, which is internal range liquidity. So let's just go down to smaller time frame. Okay, so to make this video not to be too long, I'm just going to give you 2 examples, right? I'm just going to give you 2 examples. And as you can see in this smaller time frame, the external range liquidities are already identified, right? So this external range liquidity was taken. When it was taken, price had to return to the internal range liquidity, which is this daily fair value gap, right? This is a daily fair value gap. Let's move down to daily time frame again. 1 day. You would see what I'm trying to say. So I'm actually trying to start from here so that I would cut this video short so it won't be too long. This is an internal range liquidity. This is a fair value gap. So this is the example. This is where I'm trying to show you the example from right now. This is the first example, and this is gonna be the second example. So let's go to the smaller time frame again. Yeah, this is the smaller time frame, and I'm just gonna explain to you how I got these entries, right? The 2 entries. This one was taken on Thursday, and this one was on Wednesday, right? So this is the external range liquidity I identified from the bigger time frame, which is the daily time frame. When price took it off, it came back to this daily time frame internal range liquidity, which is a fair value gap. So when price comes into this place, what I would always want to see is another fair value gap displacing out of that daily fair value gap. I'm gonna try to see another fair value gap displacing out of this daily fair value gap in a smaller time frame. That is how I identify that the market is about taking out another external range liquidity after filling this internal range, right? So the price action I always look for is this. When price moves into this internal range liquidity, right, what I'll be expecting to see is a displacement above from that internal range liquidity, right? This was the daily time frame internal range liquidity. When price came into it, I was expecting to see a fair value gap displacing away, and I was also expecting to see a break to the upside, the last high that caused this move into this daily fair value gap. I was expecting to see that last high taken out again in order to identify that now, yeah, we are about to take this external range liquidity, right? So what I did here was just to see that price moved in here. When I saw price moved in and then took off, leaving these fair value gaps, right? Then broke this last high that took price into this fair value gap, daily fair value gap. Then when I noticed that break to the upside, I placed my buy limit for entries, right? It never actually triggered because it was a holiday, so I didn't take the trade. But it triggered later at Asian section, but I was asleep. I didn't take the trade. But when I woke up in the morning, I noticed that it went exactly how I planned it, right? Taking out the external range liquidity. So when that happened, I was like, yo, this is gone. You won't get every opportunity. Like, you would miss opportunities in the market, and it's not meant to frustrate you because you know that the market is there 24/7, 365 days, and you're still gonna get opportunities in the market because the market is not going anywhere. So when I missed this opportunity, I was waiting for the next one. See how I got the next one. That was on Thursday, the one I took on Thursday. I'm still gonna post the screenshot like I told you on Instagram and all my social media handles, right? So let's go back to the daily time frame again. After this example, so the last example from the daily time frame is the trade I took on Thursday, like I said before. So, and this is actually the last. This was the first one that I just showed you now, and how price moved up, right? And this is the last one I want to show you right now. How I got this entry that made me over $1,000 on Thursday night, right? So let's go down to the smaller time frame to see how we're gonna take price from here to the upside, taking out this external range liquidity. So this is the smaller time frame right now. I'm gonna explain what happened right here, and you're still gonna see that this is exactly the same thing that happened here. It also happened here, right? We saw right here that price took out external range liquidity right here, then filled internal range liquidity, and then showed me a price action from this smaller time frame to enter, and then we took out another external range liquidity. Then when we got to the bigger time frame, we formed another entry from a bigger time frame fair value gap, which is a daily time frame fair value gap. Then what happened right here is exactly the same thing I was expecting to see here. Then when I saw it here on that Thursday night, I simply placed my limit order again, and I targeted simply a 1-to-1. Why did I target a 1-to-1% profit? 1-to-1 risk to reward profit? Because the external range liquidity is just very, very close to the internal range liquidity. So I wanted to play safe and then trade accordingly, because my take profit area would have, I would always want my take profit area to always be the equal highs, which is the external range liquidity. But I actually had to extend this to a 1-to-1 to get what I need here, setting my trade on break even after this high was broken, or after this high was met, and that was how I actually managed the trade. What I saw here was that price moved into this daily fair value gap and then displaced above with a 1 hour time frame fair value gap, just exactly like it happened right here. So when price displaced above right here, then I found reasons to set my limit order right here from this fair value gap. And then once price triggered, it moved to my TP straight without a drawdown. So this is actually going to show you that price is fractal, and in any time frame, the same thing repeats itself, right? So I just, this is actually my first video, and I know it's not perfect. So, to crown it all, I just want to say that these videos you're always going to see here are just for educational purposes, right? And this is something that I've done for almost 2 years now, and I must say that I've been getting paid, but I think it's right about time to show people what has been getting me paid, right? So thank you very much. Follow for more content like this, and remember to subscribe. See you next time.